Welcome back, Outfunders. Hopefully you are having a very terrific Thursday today. The market's having a very mellow Thursday, and makes sense. We had a pretty strong gap up yesterday, and you know, kind of just hung out there first hour and a half of the day, 2 hours or so, and then slow grinded into for much of the middle part of the day, second half of the day, that kind of thing. The market then gapped up a little bit today, nothing crazy, but did gap just above yesterday's high. It did gap up about 1/4%, not quite, and then a little bit of a pullback there first 30 minutes, basically basing here the past hour, looking like it wants to now continue higher. Probably makes sense that it probably just maybe slow grinds higher the rest of the day. Nothing crazy, but I would expect very slow grind higher throughout the day. Anyways, that's the Q, or that's the SPY. The SPY is currently up about 0.1%. Qs are up about 0.1% right now. And Qs kind of look similar to the SPY over the past day. Not much too indifferent. IWM, nice gap up, faded down a little bit there first hour yesterday, sideways basically since then. We did actually take out yesterday's low this morning. That's kind of where we bottomed out, kind of bounced up from there. DIA is basically just kind of been flat since yesterday's gap up, but it is currently negative, currently negative about 0.1%. RSP bouncing back a little bit today. Not to say that it had a down day yesterday, but definitely had a little bit more of the sell action there yesterday morning to start the day. A little bit of an uptrend going to the second half of the day. A little bit of a drop there to end yesterday and even to start today. But yeah, the past hour, I mean, nice run here on the RSP. Currently up 0.4%. So out of the 5 I track here, definitely leading the way today. So there you go. Nice little sandwich in between the 50-20 moving averages there, or the 100-200. Yeah, also the 100 there. So got a nice little sandwich action going on. Probably continues higher over the next few days, I'd imagine. Probably makes sense. The DIA back-to-back kind of like small doty days. Just that gap up yesterday. So this looks pretty good. I'd probably be looking to be a little bit more bullish on that. I kind of like that move, just kind of hanging out. Not really doing a whole lot. I like it. IWM, just kind of hanging out. A little bit lower wick coming in today. Currently up 0.2%. Probably does continue higher. Just having a hard time getting through some of these moving averages, especially when you gap like right to the 50 and the 100 moving average yesterday. Kind of just hanging out there. Qs gapped up a little bit today above yesterday. Kind of a quick pullback to start the day into that 20 moving average, 20 EMA there. Kind of bouncing off of that, looking like it wants to go higher, so it looks pretty good. Same kind of deal here with the SPY, a little bit of a gap up above yesterday's high, pulling back into the moving averages. Looks pretty good, probably continues higher here in the next few trading days. Just kind of seeing this downtrend right here, because this is basically where we are, like right on top of this downtrend. So kind of makes sense. We're having a little bit of an issue there, but we'll probably be getting through there. Not really a huge deal. So anyways, I would expect a lot of these markets probably just continue higher in the next few days. Probably as we go into the later parts of the day, probably just slow grind higher. VIX, kind of just hanging out, not really doing a whole lot. Okay, DXY bounced pretty good yesterday by the end of the day. Okay, a little bit of an upper wick today. It's about 5. Is that 5? 4. I can count. 4 days in a row. Looks like it's going to come in red. Not huge bearishness, more of just like kind of resting into the moving averages that are kind of trying to come up and catch up. Yep, gold looking pretty good. Man, gold looking solid, looking shiny. Gold's probably going to continue higher. Okay, gold looking good. 10-year yield pulling back a little bit more today. Okay, I believe last time we kind of got up into this run. We had a run like this back in 2023. We had that quick pullback to that 20 EMA. That's basically about what we're getting to now. I mean, back then we did over like 3-4 days. So, I mean, this one was kind of like more like 2. So, I would look at bonds and be like, yeah, you know what? I think I would want to be Probably going maybe bearish on some of these bonds, whatever looks pretty good on some good setups, just because of the yields. Probably getting to spots where they're gonna start to get some uptrending support type areas there on the yield side. So I'd be looking for maybe some bearish plays on some of these bonds. Anyways, HYG kind of coming to that 100 moving average, so you gotta kind of like that. Maybe you could take that bearish with a stop loss above these highs from early December, late November, something like that. That's not too bad. Maybe not the best win reward. Maybe back down to the lows of around 78, but I mean it's a decent setup there. This might not be a bad one here on the LQD, because you got some of these pivot levels from before that you're kind of getting into. We kind of broke down this little cluster here, kind of like an inverse flag pattern almost, but now we're kind of retesting into the lower end of that. So you could say, yeah, you know what, I don't mind taking that bearish. You have like maybe a stop loss up here above this little bit of a pivot level. I would say definitely above this spot right here. But if we break down, then you can move it down a little bit. Kind of gives you a little bit of flexibility. Same thing probably with the TLT here. Yeah, TLT maybe goes a little bit higher to the 20 moving average, 20 EMA, because that's where this low would be. So yeah, I think the way yields are kind of looking, some of these bonds are looking, I think they've gotten quick snapbacks here, and you know, yields might look for the bounce, which then you're definitely maybe looking for a quick bearish rollover sometime over the next week and a half or so. That's kind of the way I would look for it. But you know, I would also try to be kind of flexible on your stop loss. I mean, we seen a pretty strong move, especially yesterday on some of the yields and bond stuff. So it could definitely be one that, you know, if you get it, cool, but you want to give yourself a little bit of flexibility. That way, if we start to slide through, it's not a big deal. As far as sector rotation for the day, we got utilities coming back, leading the way. Real estate bouncing back a little bit, okay. Industrials doing pretty good there as well. Tech, financials, materials, energies, a little bit of outperforming there. Underperformers, we got communications, staples, healthcare underperforming a little bit there, and discretionaries at the lower end of the day. As far as intraday performers, we got tech underperforming. Okay, tech is underperforming, and discretionary is kind of in line with the market there. So discretionary is tech, kind of around the market performance for the day. And you got communications, materials, healthcare, financials, energies, and staples all doing pretty good. Industrials, real estate, and utilities is just rocket shipping, man. That thing's looking strong.